Hey everybody, this is Mavi.
This is G.
Welcome to another episode. We're gonna talk about the market, what's happening in the market. So, what is the number one question you get, G, in the market right now?
That's a good one, Mavi. The number one question we're getting these days is, when is the market going to crash? Or I'm waiting for the market to crash.
Yeah, all the buyers, man, all the first-time home buyers out of the market right now.
They are. It's been unprecedented. I think we're going on 20 years of just steady rising prices.
Yeah.
You were telling me earlier it was up. Last year,
Yeah, I think no, I don't think, but it's almost 30% gain last year.
which is insane.
Which is insane, exactly.
So-
And then all the market experts, all the new realtors, or the realtors saying like it's going to be another 10%. So this year, let's see how it goes.
Yeah. So,
Right, but there's another factor. We just heard the news yesterday. They are increasing the interest rates by 25 basis points.
they are. I think TD had that announcement yesterday.
Yes.
But the central banks come out as well. Everybody is saying, because we're in such high inflation these days,
Yeah.
expect interest rates to go up this year.
Yeah,
How much, we don't know.
Exactly. We don't know, but like for now, it's 25 basis points, which is like 0.25%.
0.25%.
0.25%. So it's not gonna make much a difference, but it's something. But also we're gonna see the inflation. It's already been up this year. So you have seen the gas prices. You have seen the groceries going up.
Everything
Everything
is up across the board, 30-40%.
Yeah. So if the market is going up, the inflation is going up. So we gotta keep the factor in. And let's see. Are we gonna do some numbers today?
We're gonna do some. I'm the numbers guys. We have to.
You're
do
the number
numbers,
guy,
right?
and we're gonna see like all the guys telling you guys the market is gonna go up 10%. Buy now. We don't know either. I don't think so. They know either.
No, nobody. The standard response is, Mavi, I don't have a crystal ball.
Yeah.
But buy now.
Yeah, but it's been going up from last 20 years. Now it's gonna go up again. So we don't know. We are not the future tellers.
We're not, but we do know
The
like
numbers.
You mentioned, we know the numbers and we know the key indicators. We know
Yeah.
interest rates are going up. That's what the indicators are saying. We know supply is the lowest it's been in like 20 years,
Yes.
and demand is still outrageously high. And the third factor, doesn't happen often, is government intervention, and that's something to be keeping our eyes on.
Yeah,
as
so
well.
these are the three factors as just G told us. So we're gonna go number by number, and then let's see what kind of numbers we are getting.
Okay.
And then like the real estate is just number game, right? And if you are in the market, if you wanna buy, like you have to do the calculation. Without the calculation, I don't think so you can make any perfect decision in the market. Otherwise, it's just gambling. You can take your money to the casino and then hope
Put it
you
on
win.
black. Put it on black.
Yeah, put in a black and hope you win. But if you are investor, or if you wanna really do your due diligence, you should do the numbers. And we are here to discuss the numbers today. You make your, because I think in a real estate, every situation is different. Every client is different. So we cannot like put everybody in the same basket and then hope for the same results.
It's true.
Right?
And our job as real estate agents is to add value.
Add the
we
value,
talked
yeah.
about this, right? And it's how do we add value? We give them information.
Yeah.
We educate the client.
Yeah.
So what we're gonna do today, we're gonna show you what it would cost to buy a home right now,
Yeah.
and then we're gonna go through two scenarios. One,
Yeah.
prices go up like everybody thinks they're gonna go up.
Yeah. 10%.
What is that gonna look like a year from now?
That's right.
And the other scenario is, let's assume there's gonna be a correction.
Yeah.
You know, if prices go down and interest rates go up, what happens?
What happens exactly?
So, again, we're not fortune tellers,
Yeah.
but we're going to give you guys the information so
Yeah.
that the client can decide, you know what, the risk of waiting,
Yeah.
I'm better off buying now.
Okay.
Or based on their situation, maybe they want to wait.
Yeah, because we don't know everybody's situation right now. So you might be like a business owner, you have like steady job, like you're making certain number every year. So that makes a lot difference in every situation,
Yep.
right? So we can run the numbers. So with your own situation, the situation you are in right now, you can run the numbers. What are the numbers? So and then you can make your own decision. We are here to help you with the numbers.
Perfect. Sounds
And
good.
yeah, let's do the numbers.
Yeah, we're gonna run through 3 scenarios. We're gonna do what the current market's at in terms of interest rate, you know, an average price home that someone's looking for in the market. And then we're gonna do a scenario where the market does correct.
Yeah.
Right? I don't think it's gonna crash. I think it would be a correction. And we're gonna go through the numbers on that scenario. And then the third one, because we wanna give you all the information,
All the information.
is what happens if the market does go up like the experts are predicting? What position does that put you in? So let's get to it.
Yeah, let's.
This is
So-
January 2020.
Yeah, so we're gonna discuss the current market situation right now. So what kind of position we have in the market right now?
Right. Right. So current interest rates, I'm going to use an I just for rates. I can get a variable rate right now. I was checking with TD, 1.5%.
1.5, yeah, right now.
Right. And Mavi, you're a realtor, you're active. I'm a realtor, I'm active. The market's crazy, guys. Like,
Market is crazy. There's no inventory right
there's
now.
no inventory whatsoever. So, you know, I'm going to buy something today for $850,000. Now, most people will put down 20%,
Yeah.
right?
And what 20% would look like as a number wise, guys?
20% of 850,000 would be 170,000. Okay. Now, I'm not going to get into the closing costs. I don't want to complicate it. We want to keep it simple, right?
Yep.
That means our mortgage amount is your purchase price minus your down payment,
Down payment.
right? So our mortgage is going to be $680,000. And our payment on that, our mortgage payment every month, and I'm not doing this in my head, guys, okay? I use the calculator online.
Yeah.
I'm good at math, but I'm not that good. Is going to work out to around, what did I have here? $2,700, $2,720
Per month.
per month. Okay, that's what it's going to cost you every month to own something for $850,000 today.
Yeah, if you're living in GTA and hoping to buy a townhouse, I think is you can't even buy a townhouse with that price right now. But we're just gonna take the number for example for now, and this is the current situation. If you're looking to buy a house, so that's gonna give you the monthly payment, $2,720 per month, and let's see if the markets go up.
Actually, let's do down first.
Okay, let's do town.
Because the question we're getting is the market going to crash?
Yeah, but we gotta consider the market's up 30% last year. So if it goes down, so it's let's say for now 10%.
10%.
So what
That's a
kind of
good
situation we gonna be in?
number. So let's see. So this is scenario 2, guys. And we're gonna go into the future. We're gonna go a year from now. We're going to January 2023.
Yes.
Okay. Now, interest rates, guys, we already talked about it. Inflation's high. It's still increasing. TD Bank's already announced a rate increase of 0.25%.
Yeah.
Central Bank has come out and said expect interest rates
Yeah.
to go
I think that's for sure.
up
The
over
interest
year,
is gonna go up.
right? So let's assume it goes up 1%, 1 full percent by the end of
Yeah.
by the start of next year.
I think that's a good number to work with. I think 1%.
So we're going to be at 2.5% next year. Okay. Now, price.
We're gonna use the same price.
Well, no,
No?
we're assuming a drop.
A drop.
We're assuming a price drop. Right. I'm going to bring out my red marker here. Prices go down 10%, guys. So this same townhouse is going to be worth 10% less.
So around like 7.
7, again, not in my head, 765,000. That's good if you're buying.
That's
The
good if
market
you're
goes
buying.
down,
Yeah.
right? That's a good thing. You're paying $85,000 less,
Yeah.
which is a good thing.
As a purchase price,
This also means your 20% down payment,
it's gonna be less.
it's going to be less as well, right? So it's going to be 153,000. So now, guys, I'm going to use a short form MTG for mortgage. our mortgage amount now is $612,000. Okay? And our payment here, don't mind the short form, you'd be surprised, because the interest rate's 1% higher than the year before. Even though you're paying less for the house, it's actually more. Not by a lot, but it's $2,750 per month.
So guys, even the interest rate is gonna go up by 1% by end of this year. So you're gonna pay less as a purchase price, less we assume 10% a drop.
Yeah.
And obviously you're gonna pay less down payment, which is gonna be around
$150,000, yeah.
$150,000. And mortgage, actually you're gonna be taking less mortgage, but your monthly payment is gonna be 30 bucks
higher.
up.
$30 higher. So what does this mean, guys? Okay. You kept a little bit more money in your pocket here on the purchase and on your down payment.
Yeah.
But your mortgage payment is made up of two things. It's made up of an interest part, half of it is around the interest payment.
Yeah.
The other portion is your actual what you're paying down on your mortgage for what you buy your house for. Okay? So by waiting, you can pay more for the house or you could pay more to the bank.
Yeah.
Right?
'Cause I think
that's the difference between these two scenarios.
Yeah, so when the interest rate is gonna go up, so in your monthly payment is gonna take the major part. So you'll be paying more interest and less principal.
Yeah.
Just to be,
Transparent.
Transparent.
Yeah. So you're going to pay more interest over the life of that mortgage.
Yeah. That mortgage, yeah. So let's have another scenario where it's gonna go up.
And again, we're going to do the same January 2023, right? Only thing we're going to change is prices here because we're confident interest rates are going up. So
Yeah.
interest rate is going to stay at 2.5%.
So we're gonna keep the interest rates same at 2.5 for I think because the inflation is going up, guys, and out of I think 99% the interest rate is going up. So we don't know the market, but interest rates are going up for sure.
Okay, in this scenario, guys, like we said earlier, a lot of the experts are predicting a 10% increase this year.
Yeah.
Right? Mavi mentioned this already. 2021 market was up almost 30%.
30%, yeah.
Right,
I
so-
think it was a crazy year.
A crazy year. Crazy year.
Crazy year. Yeah.
So 20% of that new price of 935 is 187,000. That would give us a mortgage. If my math is right, 748,000. And a payment. And guys, little secret for you, no surprise here. Interest rates are higher, price is higher,
Price is higher, so monthly
payment will
payments
be
gonna
higher, much higher.
Yeah.
Okay. $3,360
So
per
I
month.
think it's almost a $600 increase in monthly payment
So
because the interest is gonna be up. So price is going up 10%, and your down payment, you need more down payment.
yeah.
And you're gonna be taking more amount in mortgage, and obviously then your monthly payment is gonna be up.
Okay. Guys, what we're showing you here, it's something, I'm an economist. I've got an economics background. It's something called opportunity cost. By waiting a year, these are your two potential scenarios. They could be going up more, they could be going down less. This is just to give you an idea. But if prices are up,
Yeah.
you're going to pay more for the same house,
Yeah.
not only on the purchase price,
Mhm.
but every month because the interest rates are going to be up. Okay?
Yeah.
That's a big risk. Okay. Now, the opposite, if you buy today and prices are down, well, no one said you got to sell next year,
Yeah.
right? So this only matters when you're selling,
Yeah.
right? Most people buy, when they get their mortgage, they're financed for 3 to 5 years,
Yeah. Exactly.
right? That's the time horizon.
Yeah.
So I think if you're buying today, you're safe here, unless it's a catastrophic like market crash,
Market crash, yeah.
we can't predict.
So we don't know about, but like only we can help you guys with the numbers, and I think there is not much difference. It's only I think $30,
$30 a month.
right? It's only the scenario like if the market goes down, but if it goes up, then you'll be paying more money, taking more mortgage, and you need like more down payment, and monthly you're gonna pay more.
$640 more a month.
Yeah,
which is a lot of money.
a lot of money.
So, you know, the other thing we didn't cover in scenario 2,
Mm-hmm.
if you've got a house that you're living in already, you're paying a mortgage, that's great,
Mm-hmm.
right? If you're not and you're renting,
Yeah,
current rents are crazy.
yeah, exactly.
And if you're renting for $2,500 a month
Mm-hmm.
for a year,
Mm-hmm.
that's $30,000.
Exactly.
So not only are you know, your payment's the same essentially,
Yeah.
but you paid $30,000 to pay my mortgage. I'm a landlord,
Yeah,
right?
exactly. The one thing I want to discuss, guys, in real estate, every situation is different. So we cannot say like, okay, market is up, buy, or it's gonna go down. But we can give you guys the number, and you can relate to your own situation. And if you're in the market looking to buy or sell, I think it is your duty to do the due diligence and work with the professionals who can actually sit down with you guys and give you exactly the right advice with your own situation.
I agree, Mavi. Guys, if you're working with somebody, this is a most important purchase of your life.
Yeah.
Get a second opinion. Okay? If they're not laying out all the scenarios for you,
Yeah.
get a second opinion. It doesn't cost you anything. Remember, you're the boss.
You are the boss, and I
Right.
think most of people don't understand. Let's say if you're working with any realtor or any mortgage agent, you are the boss. You need to sit down and have a proper conversation, and then get those numbers right, and then make the decision what's the best for you.
Yeah.
Right? If somebody's not giving you time, not having a conversation with you, I think you should be looking out for another advice. Or
I agree. You know, thanks guys tuning in. I hope the numbers don't overwhelm you.
Yeah.
I hope we simplified it enough so
Yeah.
that it makes some sense.
Mhm.
And just like we said, you know, get informed, get educated
Yep.
to make your decisions.
And this is that's it for today. And we'll be back with another topic, another hot topic in the market.
Yeah, I'm looking forward to it.
And we'll see you guys again. And thank you for joining us today.
Have a great one,
thank
guys. Thanks, Mavi.
You. Okay. Bye bye.